Hello, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Market Analysis. It's been a crazy morning, but we predicted earlier this week that we were going to have some major movement, and again, we know why, right? Everybody knows what's happening on Wednesday this week, and hey, there's not much more to be said about it. It's a big day tomorrow, and all the data we've seen thus far has really, again, provided not, whoops, not more fuel for the fire, but at the end of the day, we know what's going to happen. It's just, I think it's going to be pretty crazy. So, whoops, hold on. Sorry, I hit a button and it was like, oh, do you want to update your PC now? Like, no, that would be bad. But anyway, let's just dive right into things. I can't believe it's June 15th already. The month is half over. I feel like we just started June. I feel like if we take a breath, we're going to be talking about July and the July 4th trading week. It's going to be nuts. But anyway, let's go through and let's go. If you guys don't know who I am at this point, I've been around with Nadex for about 4 years now. Done articles with them, education summits. I've done, morning analysis or weekly analysis, depending on, what time of year we're doing it. I have a blast doing it. I absolutely love Nadex. I think it's a great product that everybody should be having as additional arrows. And even inside of Nadex, I'm just not like a binary guy. I like binaries, call spreads. I felt like for a while I was like one of the only call spread people out there. And I feel like people are finally jumping on board and like, well, I see why the call spread would work. Like I've been telling you. But also knockouts, the type of trader that I am. I think knockouts are great. So again, if you are only a master of one, you should master all. It's definitely possible, and Nadex provides that with a number of different assets we can trade. So as far as me, again, I run a company called Keep Trading Simple. My analysis is a little bit different than what most people are used to. I am not a big indicators-based guy. I don't have 12 different indicators looking for the secret sauce. I've been trading since about 2000. That 1999, 2000 timeframe is when I really started getting involved with it. Seen all kinds of different strategies, this secret and that secret, and this sauce and that sauce, and I'm just not a believer in it. Started with traditional stocks and options, so I came from that realm, so very, very familiar with it. Found Forex after that, loved it because of the leverage and the 24-hour market. I thought it was great. Learned about futures, became a financial advisor. So not only am I a trader on the outside, I've been a trader on the inside as well. Got kind of an inside look, got to see the some of the big trading floors that exist out there. I'm happy to say I actually did work in New York City. I lived actually, I could throw a baseball to the New York Stock Exchange. Every morning I used to walk past the New York Stock Exchange on my way to work. The bull was right outside my office. I thought it was great seeing all the people take their pictures with the bull. So again, been around for a while, seen a lot of different things. I love to share it. Left the financial industry, realized very, very fast it was not what I thought it was. I'm very thankful. I learned a lot about bonds. I didn't know anything about bonds going into it, but really learned how that is kind of a bigger piece of the puzzle. And then traveled around the US and Canada, basically teaching people how to trade the market. So now with the way that everything is virtual, it's easy for me to do this and stay at home. And then that way I can spend more time with my family as well. I do have to update that picture. Melissa's actually, she's expecting the next one. I will be a father of 4 in October. The 2 boys, they're 11. They're, I think, like 9 in that picture. The little one now has hair down to her butt. She's in the other room on her tablet. So she is much grown since that picture as well. So, and you guys know that I have a beard right now. I never got rid of it from COVID. I just kept it. I think my wife would like me to get rid of it, but you know how it is. Anyway, let's dive right into things for today. Before we dive into a chart, let me make sure we cover this Nadex risk disclaimer. That trading on Nadex involves risk and may not be appropriate for all investors. Members risk losing the cost at the end of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources, and any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group, if you guys didn't know that. With that said, here's our agenda for today. Let's cover the upcoming news events. Again, you guys know I absolutely love news trading. I love everything about news trading. I love how it can really kind of make my day much, much easier. And it's funny because the experts are like, oh, you should stay away from news. It's so bad. Yeah, right. I personally believe it is the absolute best time. Why? Because it provides catalyst. It makes a lot of movement happen. And again, yes, there are long-term or I guess intermediate-term strategies where we want no movement. I kind of like the movement. Get me in, get me out, and thank you. I'm going to go have a good rest of my day. So we're covering news events again. A lot of stuff happening tomorrow. Great news this morning as well, but I'm really looking forward to what we see tomorrow. We will break into indices first, and again, we've had a lot of movement. If you guys, Todd and I call it the parting shot, but kind of the last thing that I mentioned this morning was the indices expecting the drop. Again, inflation's there, retail sales are not there, so it was the perfect recipe for it to drop, and we had a level of basing any racetrack. If you guys don't know what I'm talking about, go over to the YouTube page for Nadex. Make sure you do give it a follow because you'll get to know when we are going live to do analysis. But you'll see in there we talked about, if we hit this level of basing, any type of break below that, it was a trigger. And two great examples we'll see in a second. Then we'll dive over to Forex. Again, interest rates typically is again, big dollar strengthening kind of news release. And it's been kind of struggling because the Fed has not yet acknowledged that there's inflation. Like we see it, but it's not real. It's going away. As a joke, I put up the Webster's dictionary the other day of what transitory actually means because we haven't seen it yet. Yeah, so we'll cover Forex, see where the opportunities are, and then last but not least, we'll cover commodities. Commodities have been very interesting. Oil has been on kind of a tear. It ran into a higher time frame zone and has given us some pullbacks from it now. Gold and silver obviously on the menu. Gold is more of the traditional asset of how to play inflation. And again, we're seeing inflation, and as there's talks of inflation tomorrow, I think it's a good opportunity for gold. But on the flip side of things, the kind of newer trader in the market, not new as in like beginner, but like kind of the new blood that's coming in, like the Reddit traders and that kind of stuff, they are focused a bit more on silver. We've seen that there's been a lot of volatility with silver, kind of double what gold does in the same direction. And some interesting levels there as well. So we'll make sure that we cover that. We'll do gold, silver, and oil today. And then natural gas is one. Sorry, one of the grab things about the cough there. Natural gas is another one that we don't really talk about it all the time, but there's been some really big movements lately in natural gas. And, I've said this multiple times, but a chart is a chart is a chart. I don't really care what it is. Supply and demand is something that exists. If nobody wants something, it's not worth anything. If everybody wants it, it's worth a lot more. When you understand those things, doesn't matter what it is, but energy has been one of those things that we have seen. But I saw something a little while ago. I think YouTube said we've had 56% inflation in basically combustible oil products like gasoline. 56%. So a lot of our inflation is kind of over there. But then things like healthcare, right? Healthcare companies are not jacking the rates on us, but man, used automobiles and gas, man, it's through the roof. So again, I think bringing up silver and natural gas today because they are kind of not your, I don't know how to say this, not your grandfather's, commodities. I think are both important today. All right. So let's go ahead and pull right in. Let's see, where is my mouse? My desktop's a little bit funky today. As I said, I clicked a button and next thing you know, it's like update your PC now. It's like, no, and it moved all my windows around. So let me get my the correct window here. All right, there we go. So ES will be the first one that we talked about. This morning, again, as that parting shot with a couple minutes to go before 9, we mentioned that, we were sitting kind of in this category right here. It was right above, right at this 9 o'clock, this last green window here. I mentioned I love this basing, and I put this big yellow triangle talking about, hey, listen, we got what's called a racetrack, right? It was a very fast-moving price, not a whole lot of pullbacks. We were looking for that to, kind of roll over and come back down again, and we ended up getting it. It blew through, it came back up, grabbed that level, and then continued to push all the way down again. The box is marked off as a 1 to 3, as you guys know. I'm a big believer in, again, trying to stack the odds in your favor. Make sure that you are taking trades that have the ability, right? Have the ability to move at least 3 times what your risk level is. In this case, you can see it went much deeper, and we talked about it coming all the way back down again. And in fact, right where your profit target should have been, right here at this red candle, is kind of what it bounced off of. You can see it actually went a little bit past actually, and that is almost a 1 to 6 risk to reward ratio trade. So one of those great trades in the morning. Not much to be said about it now, but it's one of those things. We had the green line up here at the 4250. I think it's a very important level to talk about. Again, anytime you have 50 or 00, it's always a psychological level. And you can see if we drew kind of a box up here right around that level, you can see that it kind of pulled back on it, came down, and you see how it keeps going on both sides. It was up here, then up down, then touched it again, then touched it again, then came up and touched it again. It's an area where we definitely need to keep focus. And again, it's because of the psychological aspect of the 50. Right now, what I would say is, the next time we have a decent level coming in, actually this should be green, um, would be down a bit lower than where we are. Down here would be 42.24, which is funny because that used to be um, one of our old profit targets, right? We were looking for that one to come up and finally hit 42.24. We were talking about forever, and then finally right here, it came up and it hacked through it, right? So I would say that's the next time there's at least a clear area of buyers. Like I said, I think at this point, a lot of this is profit taking. It's lunchtime. It did kind of an 11 o'clock kind of hick back. It's got some room to run. And again, there's going to be some chopping through that we need to do. Overall, again, this goes completely, I mean, this feeds directly into what we saw with news, right? The news this morning, if you guys were not watching, and again, had you been in yesterday's sessions, we talked about having a split. And by split, I meant the retail sales was going to be red and the PPI was going to be green, right? Basically, this is the exact recipe to make the market drop. Why? They're not selling as much and they're raising the prices on everybody, right? Neither of those two things are great. So again, there's your news move. Again, if you're in, you should be out at this point. Wait for it to stabilize. And again, maybe if we can push down the rest of the afternoon, this 42.24 would be an area where, we can look for maybe some type of an end of the day rally, right? We've seen that's, end of the day rally, feel good Friday are very popular kind of things that happen out there. So again, we can look for both those things. Going into tomorrow, all right? So tomorrow is obviously going to be a very, very big day. The FOMC meeting notes are coming out at 2 p.m. tomorrow. Now, in the morning, we don't really have a ton. Really, the only thing we have is crude oil inventories. The CAD CPI numbers, why it's great that the CAD is seeing inflation. Obviously, different economy, but again, it's one of those things on the global spectrum. If we're seeing it, you got to watch out for it. And they not only have CPI, but then they have all their kind of funky little trend medians and comments. This FOMC, there's gonna be no rate change, but the big question is going to be, when are they going to start raising interest rates? What are they seeing? Are they going to acknowledge inflation? We talked yesterday about how Powell is going to have to really kind of break down and justify, what does moderate inflation look like? Because they mentioned that higher than normal, which means it's going to be above 2. Everybody assumes it's going to be 2.5, but what happens if it's 3% is what they assume is going to be normal, right? And then he said an extended period of time. Thus far, everything has been talking about the transit nature of it, but every single month it's been a positive number and it's been getting higher, 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 higher. We haven't seen any type of a pullback. Higher interest rates, higher levels of inflation lead to higher interest rates, which is a no-no for the overall indices, okay? So right now, it's hard to say what's going to happen to something that's going to be 26 hours away, particularly on a 15-minute chart. But I think levels that we need to watch out for, and I'll bring it up just to kind of get a little bit more data on the screen. I think this 42.24, if it is still in play, meaning it hasn't broken for tomorrow, could be an area, okay? Top side, again, this one's a little bit harder. The 42.50 is going to be an issue. We look up here to the 42.56, 52.60 is probably going to be. This is probably another area, and again, it's going to take quite a rally to get up that direction. And I think the next really clean buy, because again, we do have this big racetrack over here with two kind of stabs into it, is going to be all the way down here at 41.95. So if I was to take the top and bottom right now to kind of say, all right, listen, where is my bullish and bearish focus going to be? I would say right now we kind of got to really focus on a level like this, and we're kind of smack in the middle right now, where we're thinking more bearish up top, more bullish down below. As I said, it's 24 hours away or 26 hours away. Kind of hard to figure out on a 15-minute chart where we're going to be, right? I don't have a crystal ball. I'm an if this, then that based trader. So for me, those are the levels that I'm looking for. I would not use this kind of risk level again. It drove. We're waiting for it to come through, and it did. It just drove and just blew right through. And again, this is the power of news at the open. Not only is it news, but it's the session open candle, right? I would say look for a potential bounce off of 42.24, and then 41.95 would be really the next level that I'd be willing to say, hey, this is great. This is wonderful. And again, oof, I'm trying to think if we can get all the way down there by tomorrow. And the big question that I have right now, and like I said, it's 26 hours away, but if we do this and we come over to here tomorrow, right? If we can drop all the way to 41.95, could that be a potential buying opportunity with the Fed, with the FOMC meeting notes? And I'll tell you right now, If they blow off inflation again and talk about, yeah, it's going to be 2023 before we even remotely start thinking about raising stuff, right? Meaning we're going to keep this hot economy that we have. As states are opening back up again, retail sales will fully recover. I mean, inflation, if they're like, yeah, we don't care, it's going to go away, no big deal, business as usual. Yeah, economy's fragile. That should be that should be that should be kind of a recipe for the ES in particular to go higher. Okay, but we got to make sure that we're in a good area. So again, we got to see where it is. Look for some of these levels to the left. We'll see. I think if anything, 42.24 is a potential kind of end of the day rally here. Otherwise, we got to see where the stabilization, and we may get it in the European session too. So a little bit harder. Now NQ is kind of the same. You know, NQ had that same level of basing. I mean, I could draw it right here. You guys can see it right there. There's the drop down. This one whipped back and forth a little bit, came right back down and touched the level. So I would say NQ is kind of in a similar situation. If we're going to mark a top off, again, typically we do this on a 15 out of 30, but I want to see the extra data right now. We have a level that's tested, right? We know it's tested. We know it's confirmed. We know we had a big push away. And again, this right here was the UK Open, right? There was the UK Open on a level. So could you have gotten short based off of our kind of touch over here? Absolutely, sure. And then what do we do? There's the US Open in that same level. So again, this was a short from the entry. It was a news. It was a session open. The same thing. It pushed all the way back down to the initiation of the move. Kind of the same idea. Now, how we trade it for tomorrow. So you can see that we got a little Harry Potter over here that we're looking for. A break below 13,927, taking advantage and grabbing the buyers down here at 31,828. Right now, and again, this was more for the target than anything else. You can see there's the basing. There's exactly where we touched, and magically, look at that. We are basing yet again. Is there an additional short here? I would say there probably is. There probably is, although there's definitely some buyers sitting in here. So I don't know. It's one of those things. Profit taking is definitely going to happen. We are going to see this kind of push back up again. Nothing that I have really seen thus far is leading me to believe that it's going to be, I don't know. Everything I've seen says that Powell is definitely bringing up inflation and the fact that we've seen greater than expected inflation. And all these things are leading me to kind of go, hey, listen, this is going to be, excuse me, it's going to be negative, right? It's going to be negative. And then trying to figure out where you're going to trade it. I like the top section, right? I do like this Harry Potter short here. So, I mean, for me, it's kind of like, you know, I'm looking at this level up here and saying, okay, we got one up here at, 14,140. I like the 139.9, I'm sorry, 13,927 for a short. And then I got another one. And if we just absolutely collapse, I got another opportunity over here. So, like I said, in the if this then that world, I got this as a short, I got this as a short, and this is a short. There's actually not a lot in here that I'm really excited right now about going long. But that doesn't mean tomorrow we're not going to get a decent base and kind of a pushover, right? And that may give us a buying opportunity tomorrow morning before the market opens. I think how do I say this? I think what happens in the European session tomorrow is going to tell us a lot about what's going to happen in the US session. Okay. I think the European session is going to place us in the correct direction to be able to take advantage of what the FOMC notes say. Now, it's not like, not like Boris has a copy, right, of what of the FOMC is going to say. But I feel like that the overall market's going to have a good sense, and we're going to have to look to that for clues as far as the NQ goes. Now, YM also had a very similar move this morning. This was the second one that we talked about parting, right? And I said if we get a break at 34,239, look for this one to collapse all the way down. And again, same thing. There's your 9:30. There's your 9 o'clock. There's your 9:30 candle, and then boom, collapse all the way down right to a level we talked about. This was actually a trade from yesterday. I'll take that off. As you can see, we're basing in that same group. And again, a lot of movement very, very fast. As you can see down below, we have a 34,034 as a next area where we have some potential buying. Now you'll notice the background is pink. So we are in kind of the upper kind of time frame area here where we're looking for sells. But this has been such a push down again. We had a big pop up, grab some sellers, a big push back down again. And we just happen to have a 34,000 knockout bracket sitting down there. So question is, are we able to hold today? Are we able to get down there before our end of the day rally? And could we see this potentially turning around and heading back up again in the European session? Now, I mentioned earlier that I do like binaries, I like call spreads, and I like knockouts. this is one of those setups with knockouts that I actually really, really like. There was one down here, 34,100, and I talked about it with my group on Monday. It was a great trade setup, but unfortunately, the knockout bracket got busted by 4 points and then took off to the races. But it was also sitting in the middle. It wasn't at the very, very far end. It would have to be at 34,090. It was at 34,096. So it literally just missed. This one is a little bit different in the fact that we have a buying zone and the knockout just happens to be on the back side of it. Now, it is a big psychological level. It does end in 3 zeros, so you definitely need to be cautious about that. A lot of times when you see that, that happens to be a big, oh, if it breaks that, we're going to sell. So you need to be a little bit cautious with it. So, again, with big news, I tend to like, the binaries and the knockouts because they had that little kind of whipsaw protection. But this is another one of those opportunities where it's a pretty decent setup, right? So just keep that on your radar. 34,034 is the knockout that you could go into for that one. And again, see what time it hits. I mean, if we hit that a European session open, I'm good. You know, if we hit this in the last hour of trading, yeah, I could be good with that too. After that, maybe, maybe not. Would I, you know, if we're down here before the European or for the US session tomorrow, maybe. It really is going to depend on some of the news we see in the overnight. Okay. But I think it does provide some decent opportunity there. All right. All right, let's go across and look at the currencies. Now, currencies have definitely been moving. As you can see, we're in the pink zone. We are looking for entries. Unfortunately, we weren't able to get one. It just kept pulling back and pulling back and pulling back, and then finding new areas to sell. But overall, we boxed this one off the other day. We talked about being up here at the U.S. Open. We missed it by, this one was super close. It was, we missed it by 2.1 pips is what we were looking for. 2.1 pips, but sometimes if you're that close, you got to kind of, you got to kind of pull the trigger a little bit early for a session open, and it was a great trade setup yesterday. Today, again, we're just continuing the downward trend. Here's where the US or the UK session opened, and literally this is all the US based news today, just kind of whips all back and forth. I think right now, if you guys know how to set alerts, 77.89 and 76.53 are two levels that I think are decent buying and selling opportunities. As you can see, the 77.90, it's up in a pink area. This one, although it's kind of it's in the blue on the grader, it is in the green on the downside. I would like this end of day. It's got a decent amount. Let's see, it's got about 28 more pips. It probably will test that level today. The big question is, are we gonna get that bounce and again match it, with the appropriate asset to take that one long, right? In fact, I think I had this one marked. Yeah. So this one's been hit twice. So again, this is probably more of a confirmation entry. We're looking for it to be similar, drop a base, and then kind of take off in the other direction. Okay. Aussie yen. So Aussie yen, we also had another short area up top. We talked about 85.06, and unfortunately, it kind of stalled on us. Right. Here's 11 o'clock. Right. It drove up, came across. Here's the overnight. Here's the European session right here. Right. European session. It did what we wanted. We were looking for a short, and we just unfortunately didn't get the answer. And again, it's going to happen. And like I said, you got to sometimes have to make that call. Like, hey, listen, it's a session open. We're looking for it to go short. Do we take it now? Do we not take it now? What does the chart look like? You could have taken this one short. I was not up awake at 3 o'clock in the morning. I'm happy to say it today. Sometimes, but not today. Short to the downside. 84.30 is the next area I'm looking for. Remember, this one will have some movement. I know that doesn't have US dollar in here, but remember the yen is a proxy for the overall stock indices, and Aussie is associated with gold. So we will see some kind of bouncing back and forth. And we got a decent amount of room to run to the downside, about 30, right? So again, this could be an overnight. You can see there's some news sitting right down here. You can see what we have here. Machine orders, we have exports. We got a couple different things in news, all right? So again, maybe time this one if we can pull this one right here, right? Maybe look for kind of a bounce to the top side for that one. Okay. And again, that would be a pre-news release. And you can trade Aussie yen through Nadex. Euro pound. So yeah, this guy's choppy. And we talked yesterday about how we had a nice little level here. It pulled up and literally just it's flatlined, right? European session, we pulled up and now it's kind of just chopping back and forth again. We're looking for clean entries, 86.39, 85.40 on the downside. We are overall in the larger green area. And again, if we want to do a smaller one, you could do it. Really, I think we have a little bit of news. Yeah, we have the pound CPI news year over year. You can see that they're having inflation as well. The pound has already started to talk about potentially, raising. Having that 1.8 come in should be good for the pound, which means this pair will probably shoot to the downside. If we can continue to get some pound weakness before the UK Open, and again, you can see it all sitting right here, take this one short. You guys know right now that if I had to put my bullish hat or bearish hat on, I am definitely in the bullish camp for the UK. They had some weakness because of the talk of delaying the lockdown and things like that. But as soon as they come out of that, I mean, everything they've said has been great. I think they're doing a great job over there as far as the economy, and they were rock bottom. So it's I'm patting them on the back, but understand the situation that they were in was pretty advantageous, right? With everything with Brexit earlier in the year, pandemic and Brexit all at the same time. They had a great opportunity to be the strong guy out there. So that's kind of what we're seeing right now. So 86.39 and 85.40. Euro yen. So Euro yen retraced and came back up again, got back in that level. This was one we were waiting for 133.76, and you guys can see right here what time did it turn? 3 o'clock. It was the session open again. There is a Harry Potter in here. You guys can see it. We'd have to adjust it just a little bit here. And again, we have not gotten the entry. Very similar to what we saw over in the two indices, but something along those lines. 3 is right there. Right there. And again, that's exactly where profit target should be. So we've seen the basing, and actually, I guess we could probably shrink it into this level now. We know that it's there. Let's adjust this down. And then that's 5. 3 is only sitting right there. So again, plenty of room to run. I would take this one probably down into that level right there, 132.97. Oops. Let's go back. I wanted to click this guy. Yes, that's 3.4. So yeah, decent trade entry. I still like the 133.76. I still like the 132.56. I think either of those is good. I think we will have some buyers stepping in, and again, be cautious of those if you're short. This level right here, because the wicks are going higher, 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 and again, impulse correction, and then huge impulse. I do think we will have probably some buyers stepping into that range. So again, make sure that you are out prior to that level at 132 or 133. Basically, we're sitting there right at the 133. Right there. Try to make this. Trying to get bright. It's always hard. Now it's like very pumpkin-y, right? Orange and black. Euro dollar. So euro dollar, you can see we got down, we were close, and we kind of whipped back up again with some dollar weakness. European session open right here. We missed it by just a tad. And again, all eyes are on FOMC. Okay, this is definitely a big mover. As you can see, we got this big kind of this is like a block party over here, right? Block party down here at 120.91. If we get a break of it, again, I'm looking for price to come down to 120.48. I like it. It's a continuation pattern. Again, a little Harry Potter to the south. And again, if you guys missed the session earlier today, oops, I don't want to make this bigger. I just wanted to move them. Oh, that one got huge. There we go. Again, this is where kind of the basing level we had right before the close. And then we started in there, we gapped up and came straight back down again, and then hit it, and it's driven lower 3 times. And again, just kind of had this little front run here. So I like this one a lot. If we get some crazy amounts of movement, for some reason, if we get a huge spike up, again, any of these would be reversal levels based off of kind of the news tomorrow. Not saying that it can't happen. I think the chances are more likely it goes down because Powell says the I word. I just feel that he mentions inflation whatsoever. It's like, oh, they've talked about it. He's acknowledged it, and that should be a dollar strength thing. If he says we've looked at it again and we still believe there's absolutely no inflation, so we are going to do nothing about it, stop looking at the news, nobody cares, put your head back in the sand, and yeah, that could lead for a big spike. But these are levels where we've seen sellers in the past, and don't forget there's a 122.12 knockout up here. So if for some reason we have this news here and it spikes up like this could be a potential area with a base if that's able to hold and roll right back to the downside in a parabolic retracement type move. It is right in the middle. I wish it was just a little bit farther past. That zone is it's a decent zone, but again, whenever a knockout is sitting right in the middle of it, it's not really my favorite. I prefer if it was just a little bit higher over here, like above it, right? So I think either of those two are decent. And again, maybe maybe it's 121.87 tomorrow. But right now, I'm still looking to get this one short. I think we have more dollar strength coming in. God forbid they mention, yeah, we could look at raising interest rates sooner than expected. I mean, it will be off to the races to the downside, right? That is extremely positive for the U.S. dollar. Should be good, right? Pound yen. So Pound yen, we were looking for shorts. There was a knockout over here. And again, this is an example of why I hate knockouts that are on the near side or somewhere in the middle. You can see there's no way it would have survived, right? It hit it, kind of went through, but we were looking for short entries. This one was a bit too far, and this is what happens sometimes, guys. This is trading. Knockouts are not always perfect, right? And that's why, again, the one thing I like about the knockouts is they are typically in close proximity to price. The thing that I don't like about knockouts is sometimes they're a little bit far away and we can't use them. You know, it's great when they line up in oil, but you know how infrequently they line up for oil, right? Because the tops and bottoms are just, you know, it's like $1 apart. It's like, come on, it only moves $1.50 a day. Why is it like $3 above, right? Because it lasts all week, right? Sometimes the dailies work better. In this case, this was more of a daily chart. And again, this is why we talk about the best times to trade. And everybody asks, what's the best time that I can trade? Well, there's 3 o'clock in the morning. Okay. This was a runner straight down of about 90 pips before hitting the U.S. Open. And again, this when the U.S. Trader 8:30 is when the U.S. Trader comes online and rolled back up again. So we'll remove these two at this point. You know, nice little short in there. I would say right now, let's look for sells up top. That was a decent sell. And again, I can take this off. I know there's an area of interest up there already. On the bottom. Nah. And again, there's another little situation. See how it's purple? It's a knockout bracket on the top side, the proximal side of the buy zone. Is that the best opportunity? Not so much, because if it goes in there, they could buy anywhere in this zone, and this will take you immediately out of the trade. So probably not the best opportunity there. But I will say, again, I'll bring this across and we can just change it to green. We know we're not going to use that knockout, but there's probably a buying area that's decent. And again, I like the way this formation occurred. Down, base, pulled up, the impulse move, right? Up, boom, and then exploded out when it came off the top of it. So 154.30. We do have a higher time frame zone here. That's why I have it marked in red at 153.85. There's a knockout at 153.80. It's in the top side. I just explained to you why I don't like those as much. Could it be a quick touch and go? It could be, right? It could be, but I think there could be some better opportunity on that one, depending on when we get down to that zone. The pound yen will probably be affected by the number tomorrow, right? The CPI year over year most likely is going to affect it, right? FOMC, it will affect the yen, right? Is this the best pair to trade FOMC notes? Not really, right? Because the UK market's open. Yeah, the overall US indices will be affected by the yen, but I don't know. You're kind of trading a proxy through a proxy, right? If that makes sense. I mean, again, you want to stack the odds in your favor. That's not really the best of odds. And again, if we do rally back up again before that CPI number, or if we punch up because of the CPI number, there's 2 knockouts up top, but neither of them really make sense for me. 155.93 is where I think shorting is, you know, something that we could look at. 155.80 obviously is going to get stopped out, and then this one is, you know, another 30 pips past. Too much risk. Too much risk. Look for the dailies over in those cases. Okay. And again, just be, you know, keep on your radar when the next U.S. The European session open is, which is right there. So we're expecting movement, most likely there or there. Okay. Pound dollar. All right. So pound dollar. Pound dollar has the ability to be a mover tomorrow for FOMC. Okay. As you can see, we had a lower level down here and it did break, right? But if you look back from where the original level started, right, we had 1. This one didn't touch. You could count it if you want, but there's 1, there's 2, there's 3, and it pulled away. The next time it was going to go through, it should have broken, and that's exactly what it did to the downside. Now, since that time, it's pulled up, and it really hasn't changed its trajectory too much. We know we have this yellow area of interest. Again, all this basing, it hit it and bounced, was the top. All this basing was the top again, basing again, it was a top again, and then just went a little bit through the top again. So that's an area we need to keep on our radar. It's not really tradable right now. We did have a knockout lower, and again, I don't have much over here. This is one of the ones that I was looking at. I was like, like where do we put the best new level at below? Again, that green is formed off of this red, so we can remove this. The issue I had with this one is I don't really love a lot of the way these candles are formed over here. Now, this is an hourly, and you can see we're still kind of in the top. I can adjust it slightly here. Trying to clear these off. Let's see. There's a bit of a gap here. And you can see that this has been an old area where it pulled up. And again, it gave us a Harry Potter here. It was the bottom here. We can keep this on the radar. And again, this may be one of those ones that if we get to there when news happens, right? It got close. I'm going to remove this because a little dangerous. I think it's an okay level. You can see it didn't get hit. It hit, got hit. I would say that that's the first level. And the next one, there's a small one here. I mean, like here, I'll just put right in here probably is one. A little one here too. What do we got here? 139.87, 139.34, 139.59. And they're okay. So the big question will be, oh, I snagged this one. I moved it. Let's go back. We're going to put it, well, this one's easy. We're going to put one there. I'm going to remove that one now, even though there's a pullback there on the 30-minute. Let's go through. Let me check it on the 30. Let's see if I can give you guys a better kind of refined area. Let's see. The problem with this one, okay, is it's about 30 pips. Okay, that's quite a big level, right? If we shrink it here, let's see what we got. We're still at 20. All right, so that's what we're going to have to the down. And like I said, the problem with these is going to be this. Okay, I can pull this out now. Delete that. Let's put our horizontal line or vertical line. Here's the UK Open. The first bit of news is going to be this. Okay, so this has the potential to go higher based off of this news. Question is, are we going to get enough movement? It's about 55 pips to the downside. Can we run down to there from now till then? Answer is, yeah, probably. It's possible, but we're going to need a little bit of help. Okay, so if we get a push down at the European Open, we have the potential to probably run back up to that level as one potential trade. For FOMC, all right, I'm expecting that it's going to drive this pair down, okay, if we already haven't collapsed. I mean, if we're like down here at FOMC, it's one of those things that it's probably not going to go much farther, right? FOMC actually would be right here. Okay. I like, in all honesty, I like this much better. I like this as the entry much better than an entry here. Okay. A lot of this is going to depend on what happens in the European session. If we can roll, here's the thing. If we can roll down right now, right? I like this as a potential and kind of probably messing with in here. Let me see. Yeah, it's about 100 pips. If we can get down to here before the UK session open, again, UK market, CPI, better than expected. That's great. Raise the interest rates in the pound. They're already talking about it. That's going to provide a bounce. Dollar, again, this one they're going to want to prepare, right? If you're expecting a strong pound, the first thing you want to do is drive the price down so you can buy it for a cheaper price, and then it'll go back up again. On the flip side, if we are preparing for a strong dollar, what you want to do is you want to put the dollar in a weak position. I like the 41.87 better. Is it going to go like this? Go boom, boom, boom? I highly doubt it, right? The reason why is because that would require a move of about 181 pips. The pound news would have to be like astronomical to move that much. Then I'd be all over it, but I think that's just asking a little bit too much. I think it'll most likely be pushing us right back into this 141.14 level. If by some chance, though, it doesn't push us down and it continues to, kind of grind us higher, and then the news comes out and drives us up, if we can be at the US session open here, right? If we can be here tomorrow, right? If we are right here, then I think we have the potential for taking that short early. Okay. But a lot of this is going to depend on what happens in the Asian session and then the session this morning. So this one's a little bit trickier, but I think this could be a nice mover tomorrow, especially with the CPI data for the pound. Now, here is the Aussie CAD. Now, the Aussie CAD took a nice little bounce, and it pushed back down again, and it was all right. But, I mean, again, impulse correction, impulse. It's still inside of the zone. It's one of those things. It's kind of in an extreme range right now. I have to agree with this one. I think this one will continue to push higher. Tomorrow is when all the CAD news kicks in. And, again, all their CPI data. Their data, it's, I don't know, the overall CPI month-to-month is starting to go to the downside. And, again, these are yearly figures. The yearly figures aren't much different than what it was previously, right? So the CAD is not really seeing as much. We are seeing all our inflation data go higher. So again, this is one of those opportunities where if you were short here or long, this is your profit target. You may or may not have taken the reversal. You were at a 1.5 to 1, and then what did it do? It gave you a reversal at 10:30 in the morning. Very, very common reversal time. I do think that this has the potential to kind of turn and roll. I don't know if this is the level it's going to have. It's going to happen. I would be looking to get long this one tomorrow, but right now, excuse me, it's just going. It's just going. And again, on a 4-hour basis, you can see what we're dealing with. You see this level right here? There's not a whole lot stopping this. So the next big stoppage in this one is literally up there. But the last time a buyer made like a really big, like impactful move, and in fact, since we pushed through, let's raise this up. Oops, not that one. Not what I wanted to do. I wanted to move this one. Oh, it's locked out. That's why. Like, why am I not able to move it up there? Okay. So again, we know we got a zone sitting right there. We're kind of flirting with it right now. We break through. I think this one goes higher. I'm much more willing to sell this up in this range here, up here at the 122.70. Right. I think that I'll just take this one. I think that's a better selling opportunity than where we're at right now. The data that we've seen, right, the way that it's continuing to push forward, dollar CAD I feel like is going to continue to go. Right. I feel like it's going to go. So again, if anybody was in this one, most likely you got stopped out of break even if you took it in the spot realm. In Nadex, you're probably about break even maybe right now, because again, it did spike all the way into that zone, so that should have been where your entry was. Yeah, it is what it is, right? I think the movement's there, but right now, the dollar people are still going to push dollar strong because of all the news this morning, and again, it was very powerful news. Dollar Swiss. So dollar Swiss, we really wanted to be over here before all the news came out, and then it just kind of coming down, pulling back up, and then European session really kind of threw us for a monkey wrench on this one. Now here was the European Open. All I did was just drive it up, and then since that time we've just kind of driven right back down again. So they kind of prefaced this one out, and it was a viable level, right? I mean, there's where the zone was. That's why I turned and flipped there. It's a double bottom, so I don't think it's going to stop again. By double bottom, I don't mean that it has two of these little kind of things at the bottom. I'm not talking about that. I'm talking about the fact that the wicks came to the exact same spot. Typically tells you that there's no orders left sitting down there. So it's going to have to give it another little kind of push through. As far as how we trade this one for tomorrow, dollar Swiss is typically not my favorite way to trade news. I just feel that it doesn't move as much as some of the more volatile pairs. But 90.46 top side and 89.32 on the downside, I think are both decent levels. As you can see, they're kind of respectively in the pink area, and then a double green on the bottom side. So right now we're kind of skirting right down the middle. And this is an hourly chart. You can see we're not really blazing anything here, right? There is no major trend, no nothing. It's just literally like, what do we do? What do we do? You good? You good? It's just not moving enough right now. So. But if you wanted to see where my 4 levels are for any big spikes, like I said, these are 2 levels I'd like to before news. These are spike levels for after the news: 90.91 and 88.70. Okay. Now dollar yen's moving, and I'm waiting for dollar yen to break. Okay, so this is where we ended the weekend. We opened up, we pulled back in, we grabbed it, and it took off. And again, it was a common trade. We're still waiting for the break. And again, we've had 1 touch now, we've had 2 touches now, and drove a little bit deeper, waiting for those touches to come in. So for me, again, we saw the takeoff on the top side, right? But we're waiting for the other side of the coin. We're waiting for this level now to come through and break and drop back down again. A break of 109.58. Again, pushing probably down about 30 pips. I'd say 109, probably in here, the 109.25-ish range. Again, the buyers are a little bit early here, but they should be more in this level. And again, this is another level, 109.08, that we've been focused on, and there's a knockout there from last week. So, I like where we are. We don't really have a trend in this pair either, right? Right now, you can see it on an hourly basis. It's not really doing a whole lot. I actually haven't really been very big into the pound yen lately. It just hasn't been. You can see 13 pips in 24 hours. It's just not really providing a lot. And it's been kind of funky the way that it's been working. It's really been kind of stuck in kind of this sideways, like long time. I mean, it wasn't bad here, but the second I was like, oh yeah, we cleared, never mind. We just pulled right back and then cleared, popped up, and it came back down again and is now rallying to that same level. So definitely more on the bearish mindset of this one. And this is a funky one. This is not how to play interest rates typically, because again, you're like, oh, strong dollar, it goes up, but it's like, yeah, but then you have the yen at the same time on the other side. So this one can get a little bit funky. Of all the pairs, I think there are better opportunities. I think Aussie dollar, Euro dollar, much better plays. Even the pound dollar, I think, has a little bit better opportunity than what we have in the dollar yen right now. But those are the levels that I have as far as areas I'm looking for potential trade setups. Now, this is interesting. Look at all the cryptos are down 1%, and the dollar is flying, right? So we'll start off with the dollar next. We're not trading this over at Nadex, but you can see we're talking about this one kind of channeling down and then bouncing off that level. It ended up just going sideways and then popping it really, very fast in the European session and then U.S. session base today. I would say right now, again, the reason why you're seeing all the cryptos negative is because, again, the play now is kind of back and forth, right? The dollar seems to be the counterbalance for the other two, right? Gold, right? Gold is like the traditional investor, right? Cryptos are the new age investor. So nice little pop off of this. And again, let's start with gold first. Gold, we're looking for this sucker to bounce. We had an area of selling. It came at base. We talked about this before. We based, we dropped, we grabbed the 1846. Parabolic move up, and it was making an attempt. It was making its move. It was really heading back down to 1846. I really hope it comes down in basis in that level. I feel like gold may finally have its day tomorrow if Powell says something along the lines of, we're seeing, although we believe it's transient, we're seeing more inflation than originally expected. That would be like, pouring honey into a monk's, jug where they can make some mead from it, right? That's a good thing, right? So with it coming down so far today, I really think that this is the market positioning gold for a spike. Now, if Powell says we expected more inflation, this is nothing, right? This is nothing, and it's all going to disappear next month, right? If he is so overly bearish that this is all like, we expected twice the inflation that we're seeing right now, and we still didn't do anything, and we're never going to do anything. Like, that could be a really bad day for gold. And I know Powell doesn't talk like that, but you guys get what I'm saying, right? I think that the market right now, we're retracing back again. It's coming down to lows because they haven't mentioned it. With the PPI number today, I feel like it's got to be brought up. I feel like the market, though, is preparing. If the big money is preparing to get in there. And I'll tell you right now, if we drive into these levels, this is going to have to be something you guys take ahead of time. I would recommend, and again, this is not a trade recommendation, I recommend you guys are looking at the binaries tonight when they print, both the binaries and the call spreads. Remember, something like this is going to be a little bit riskier to play with a knockout right now, because if we get some whipsaw movement, you stand the chance of getting stopped out on a whipsaw. If you were in something like a call spread can be used to go a continuation pattern or a reversal. Okay, depending on how close to the FOMC notes you get in, okay, you could do it, right? But just remember, you got to focus on kind of the shorter duration things. And again, what time is FOMC? What time does the gold market close? So you're going to be limited on how you're, able to play this one. Just make sure that you are aware of the limitations and kind of, the parameters for gold. There's things you got to watch out for. Okay. That's why, again, when you're unable to play certain markets, you got to find proxies for them, and that's why I think the currencies are going to provide a lot of the ability to kind of deal with this tomorrow. If you're looking to play gold but you don't like the timing or you can't find a contract that makes sense, remember the premium will be jacked. Make sure you guys are again looking at some of the proxies. By proxies, I mean something like the Aussie dollar, because the Aussie dollar will be a direct, really kind of a direct correlation, right? For it, because remember, what time does the gold market close for Nadex? 1:30. Right? It closes at 1:30. That's the daily contract. Is there anything else you could trade? Sure, there's the weekly, but the spread differential is going to be much, much bigger. FOMC comes out at 2, right? So how do we trade something that the market is closed at 1:30, but we're going, you guys see what I'm saying? So again, you're going to have to learn how to use proxies. But could you find something like a knockout? Maybe. What about like a call spread? Maybe. There's dailies for gold, but that's not really going to help us, right? knockouts, at least they're on a grander scale. Let me look real quick, see if there's one down there. There is an 1843 knockout, so there is some potential. It's sitting right there. Okay, so there is maybe a chance tomorrow if that one doesn't get stopped out in the European session. Okay, silver, and like I said, you guys can see it right now. Gold is down 0.7%. Silver is down 1.24. Again, this is the more volatile of the two. We talked about this before. Again, look at this. 1, 2, 3, 4, and then 5 is what broke through. We didn't expect it to hold. Here's where news is popping in. 28.63 and 27.18 were areas. Now, there is a knockout here as well for 26.91. It is a bit far away, so again, there's going to be an increased level of risk. But if we get a spike down and we hold right before, like if we blow through this zone as it's looking for really like a great area to buy, it provides good opportunity. I think silver has the ability to move a lot tomorrow. I actually think it will move more than gold. Um, it's just kind of how I feel about it, right? Now, again, it also closes at 1:25 in the afternoon. There's weekly contracts and things like that, so it's going to be harder to play because it's a 2 p.m. in the afternoon release. But it doesn't mean that you guys can't do it. It's just you need to be a little bit more creative with it. But I think there's some good opportunity, particularly starting early in the morning. But like I said, this is the Reddit trader. The Reddit trader will move things faster. It's more volatile. And remember, we're supposed, technically according to Reddit, we're supposed to be at $100. We're at 27.50. But I think tomorrow is the first step on this thing really spiking. Okay. And then last but not least, I said that I would cover natural gas. Okay. Look at this. Ethereum's down 1.2. Dogecoin is down 2. Even TLT is down today. GME's down 8. Here's what natural gases look like. Okay. Now let's pair this back and forth. Oh, you know what? I forgot to cover oil. There's oil, right? Big European session move, bouncing back and forth. And let me drop this back down to 30 minutes. I forgot we didn't cover this one yet. So you guys know the big, the little big, and all that. Right now, we just say we are in a big little, right? There. Let's turn the sucker orange. There's your big move in the European session, and it looks rather tame to me right now. And we got, what, 2 hours left to go in this one? Where oil is, we know right now we're in this 4-hour hourly kind of supply zone. We know we have sellers up top. It hit it here and dropped. It hit it and then started to pull back again. It is at least stabilizing itself, okay? FOMC will make a bit of a difference. We know that most of the inflation right now is in energy, particularly in gasoline, so it's something we need to watch out for. But I will say that there's definitely been movement out there in this one that has been not only tradable, but it's like get in, get out, and then be done with it. Where we are now, we got to be thinking that, hey, listen, there's got to be a potential short over here. And again, one of the things that I talked about earlier today with crude oil is this is the first time, and actually this was 52 a little while ago. Now it's up to 53. So as oil continues to rise, we're starting to see more sellers want to come into the market. Remember, oil is driven by demand, right? As things are coming back, there's a lot more demand there. It has obviously also helped that the president is anti-oil and canceled a pipeline and is going to make oil more expensive for us because, again, supposedly instantly we're going to save the world. It's kind of one of those things. It's a hard situation. I think oil has the ability to go higher. I am looking for the correct topping pattern. We don't have it yet. We still have higher highs in here. We're still pushing through. Again, we're seeing it time and time again. We hit the level, pull back, and then drive a little bit farther. And then again, when we're talking about where these things are, let me grab let's get for like an easy one. There we go. We got one there, right? We got one there. And then we got a higher one here. And then we got a higher one here. So they're slowly grinding through the sellers, but we're not quite at a stage yet. The oil inventory, let's see. Do they have it for tomorrow yet? Yeah. So right now, the crude oil inventory is expected to be down 2.1 million barrels. In a couple of hours, we'll get the API reading and kind of get a gauge on what the industry is saying as far as what their projections are. I would say, last time it was quite a miss, and the last 3 have been supposedly, again, great for oil. I'm wondering if this is going to be the one that is, that takes us in the other direction. I do think it will be rather muted because, again, I think all the traders are going to be saving the money for FOMC tomorrow because, like I said, inflation's a big thing. A lot of it's been in gas. if Powell actually talks about inflation and where it's coming from, why we're not really seeing it. If he brings it up, he's going to say, yeah, it's all in oil, right? I mean, oil inflation, particularly gasoline, is up 56%. A year ago, we were $2. Now there's states where it's $4. Okay. Um, yeah. So if he brings it up, that could provide a little bit of high. Again, typically no news is good news. um, but I think this is going to be an interesting one. Again, the way that we play oil is tomorrow morning, right? It's a 10:30 release. At 9:30, 10 o'clock. See what the open looks like at 10, between 10 and 10:15. Look for stabilization in price. The big key is going to be: do we have a little big day tomorrow, or do we have a big day tomorrow, or do we have what we had today was this big little day? Um, if we have a little UK session, it will probably be a decent trade tomorrow. If we have a big European session, right, we may see a retrace, but for the most part, I think we'll probably mirror whatever we see in that market. If it's small, again, it means a lot of traders will be out of the market. But again, look for this one for a little 30-minute kind of basing level and a pullback right before the European Open, and then again, whatever trend it establishes, you can see here's 3 o'clock up. You can see that the sessions typically run in one direction, right? Right. Once that direction is formed, it tends to follow it. Okay, so again, once you figure it out in the morning, ride that until the session change and move on from there. Now, last but not least, again, natural gas. You can see natural gas is just getting hammered. And again, some decent movement in this one. I mentioned it earlier today that I expected natural gas to be big again. Um, Part of the reason why is, again, natural gas is one of these products that it gets a lot of whips, right? I mean, you saw a big whip up, big whip back down again. We had a big whip up, and again, that was kind of the telltale sign we were expecting some movement today. There's kind of where we go, and then again, here is stay with let's see, right there is the U.S. Open, right? And again, typically the commodities market is 8:30, not 9:30. So you can see it was set up for a big short today, and it's continuing to fall. Not surprised at this whatsoever. Again, you're seeing the big push up in oil. It's holding. Natural gas is a little bit riskier in that one, but it's kind of the same thing. The same relationship that I talked about with natural gas and silver. I'm sorry, gold and silver is kind of the same thing that we have with crude oil and natural gas. Okay, natural gas provides a spiky type scenario. Natural gas would be one not to play, but natural gas has their inventories on Thursday this week. So kind of the same thing. I don't know what's going to happen in the next 2 days, right? But we know we have levels down south. I could take this level here and say, hey, listen, we've had decent buyers kind of in this level here, and there's a big spike. Will price come all the way back down again? I'd say, yeah, I mean, it's possible, right? Down into this 31 level, 31.15.7. If we can push down in the next 2 days for inventory, could that be a potential, area? Sure, it could be a potential pop. Obviously, natural gas is more of a winter-based kind of commodity. You don't see it as much in the summertime. Oil is something that people drive no matter what. You drive a little bit less in the winter, but natural gas is one of those things. Look at this. In one day, it's had all this movement down. We're hitting a level right now where we had some buyers, right? It's touched twice. We're getting close, but after that, we have a racetrack. Do we look for this? Do we look for a break of 132? I'm sorry, 122. Do we look for that to run all the way down to 115.7? Right, because of, again, the racetrack here. Right. Remember, I said a chart is a chart is a chart. It doesn't necessarily matter. All right. All right. So with that said, mark your calendars. That's it for today. Like I said, there's a lot of stuff happening in the next 24 to 26 hours. A lot of it is going to be dependent upon, again, number one, what do we do tonight when Nadex prints a new strikes? Where do we take it? Number two is going to be what happens in the European session. I'm not saying you need to wake up in the middle of the night today. What I'm saying is, as soon as you wake up, the first thing that I would do is go out there and start analyzing what happened in the UK session. The reason why is because a lot of times the UK trader will position the market where it's going to go in the US session. Okay, they take it to where it needs to go, right? It's either a retracement, it's either kind of a making it on sale or making it over expensive. And again, at the end of the day, it's just all about making money for those guys. All right. So again, mark your calendars. Actually, next week, I lied. I should remove this slide. Next week, we actually don't have this session. We have our education summit. I'm talking second to last, I guess. I am doing something on parabolic retracements, which is kind of in news, and I guess Chris Vecchio is going to do something on news after me. So it'll be kind of like a back-to-back. I'm going to talk about news because a parabolic retracement is in relation to news, and then he's going to do a new strategy right after it. So again, this will be predominantly currencies, but with everything we have going on with every country raising interest rates, there's going to be a lot of momentum and a lot of potential for currency plays in the next couple months. Really, 6 months to a year, I would say there's going to be a lot of currency plays as this nation and that nation mentions raising interest rates or actually does it. So, but that's it, guys. That's all I got for today. I hope you guys have a great one. And again, if you guys are not following our broadcasts in the morning, please go ahead and go to YouTube, go to Nadex. Just search Nadex, go there, hit subscribe, and hit notifications. Whenever we go live, you'll get updated with when we do it. And Todd and I do it every morning from 8:45 to 9. That way you have plenty of time to kind of analyze the charts for yourself for the open. And yeah, it's been fun. So with that said, I'm out of here. You guys have a good trading day today. And again, we'll talk to you tomorrow morning. And if not, good luck for FOMC. Take care.